Hello, everybody. My name is Jase Wilson. I'm the CEO and founder of Neighborly. And Eileen and I totally coordinated this blue blazer, white open collar shirt, and blue jeans ensemble for you today. And at Neighborly, we're modernizing access to public finance, which is the $1 billion per day market that funds vital public projects like schools and parks and playgrounds and bridges. And including this, we sort of adopted it as a mascot of the company, the Golden Gate Bridge, funded by bonds. And Neighborly was founded with the realization that finance was secretly guiding the nature and the scale of the things we were building as communities. And the belief that the civic visionaries creating the future in their minds and with their hands ought to be the ones in the driver's seat. And that finance ought to be a tool available to the civic visions for the future that we want and need. Uh-oh. Yay. Okay. Presentation 101, never do. A big block of text, but I promise it's very important and the only one. The result is a market that, in the view of many, is excessively opaque, illiquid, and decentralized, which is not the characteristics that should define a market that touches everyone's lives countless ways on a daily basis. Over $1 billion per day borrowed for things like schools and parks and bridges, of which $40,000 per minute is going into the hands of the public finance deal teams and the brokers. More importantly, they're secretly controlling the nature and the scale of what the communities are building, and often not in the interest of the community. And who's paying? Investors are paying by losing returns on their investments, and then taxpayers are overpaying in debt service. And then again, communities in general are paying by not being able to build exactly what they want when they want it. Quick video.
Transforming how cities finance projects such as parks, green energy, and sustainable transit systems. Every day, cities and public agencies raise $1 billion to fund these projects through the municipal bond market. They borrow money from investors and pay it back over time. In theory, anyone can invest in these projects, including local households. But to issue municipal bonds, cities typically pay hundreds of thousands of dollars in fees and spend several months on paperwork. And fewer municipal bonds than ever before are being purchased by local households. So what if cities could reduce the cost of getting projects done and enable local community members to invest directly in the places they love? Neighborly is here to help. Here's how. The Neighborly Issuance Platform allows cities to propose projects and open those investment opportunities to everyone. Instead of $5,000 minimum order sizes, cities can issue bonds in denominations as low as $100. Instead of hourly fees and lengthy wait times, cities use the platform to lower costs and issue bonds securely and efficiently. Local households and professional investors use Neighborly to discover, follow, and invest in the projects they're interested in. After the bonds are sold, cities use Neighborly to stay connected with investors and keep them informed about projects. Cities and the people they serve working together to invest for the future. Come join the future of public finance with Neighborly. Please visit neighborly.com for full terms and conditions.
Yay. And we built this so that communities can do things with positive impact and a focus especially on green and sustainable projects. We also wanted to give access to not only the borrowing communities, but to the investors. And we believe that the first people in line ought to be the people of the community lending money to themselves and to their public projects. And we wanted it to become something that was so cost-effective and time-efficient that you could begin to finance things at a very, very small and granular scale, which we think plays an important role in crafting the future that we need to address the problems that we're facing. And it's software, but it's also the Neighborly Capital Network. And as of today, this number, since writing this slide, has gone up by a couple of billion as not only individuals and people from down the streets of projects on the platform get involved, but also global institutional buyers too, who also want upstream access to these types of local place-based investment opportunities. And we think it's the right time to do this because, munis have a special appeal to millennials, and right now, millennials were increasing in income, We're looking at our future. There's the $30 trillion intergenerational wealth transfer that's happening right now. There's also an extraordinary amount of wealth creation that we're bringing to the economy. And munis, despite the industry's sort of insistence that we're too young and that we live in our parents' basements and need to think about investing only in stocks for the future, make a lot of sense for a lot of reasons. And there's also a collapsing of the cost structure of adjacent capital markets. And if you look also at platforms like Robinhood, which are doing $0 stock trading, you can see that the future is in radically more efficient mechanisms for finance. And there's also a growing and unprecedented desire for direct access, which I think has been one of the themes of this conference. We're a fintech company. We're specifically a fintech lender, but we're kind of unique in a way, and that's the borrowing entity type. There are many, many platforms that deal with individual or household loans. There are many entities and platform types that deal with the commercial entity of, be it a small business or a real estate endeavor. But so far, only one that is looking at the community as the borrower. And this is a slide that I pulled from one of our recent fundraising pitches. And to cast it into perspective, in 2015, $59 billion, totally financed through the entire market, which was, the largest year in the history of VC. That same year, our nation's communities, just in the U.S., borrowed a total of $419 billion through the muni market. And to do so, paid $21 billion in fees, primarily to documents that are largely copy and paste and risk that is pretend and other fees. And across all markets, the green bond designation has exploded, and this is sort of our starting point. And it's something that emerged only a few years ago, we think demonstrates the sort of global awakening to the idea of doing well financially by doing good for the world. So that's our starting point. So we take the platform for a quick spin. This is a peek at a project on the platform. This was a University of Pittsburgh Medical Center deal that happened last week. This is the sort of checkout process. It's a platform that you can go and sign up and say what you're interested in investing in, whether you're an individual that has $100 to invest or you're a global wealth management firm with $1 billion in monthly buying power from munis, you have something. And we think that we're activating the next generation of investors to directly invest in the places they care about. Recently, we ran a bonds challenge to be among the first groups of cities in the nation to get this new wave of financing. And I selected a couple of the winners to show you, including Burlington, Vermont, which was mentioned earlier, financing bike lanes and access to the lake on Neighborly. Also, the Housing Trust of Silicon Valley. If anybody's paying attention to what's happening in the Bay Area with housing, it's getting out of control, and so it's really exciting to work with a group that is building out, vouchers and down payment assistance for, and also new units for affordable housing in a place that desperately needs it. And then I think probably the coolest one is the city of Austin, Texas. And if you want to know more about Neighborly from the public's perspective, go read Mayor Adler's recent op-ed piece on why Neighborly is the future of public finance and what they're doing, because we think that this project will be replicated in cities throughout the nation, and it's absolutely beautiful. Austin realizes that, live music is a cornerstone of its economy, and that, it's helped to drive the city and to make it into what it is today. And this is a powerful economic driver, but also a fragile one. So this is the first ever issuance that takes into consideration the economic impact of protecting the musicians and the music venues. So this is for getting music venues that are accessible to musicians and affordable housing for musicians. And we think that this has national replicability across the arts and culture. We're a team of really passionate folks. We come from the tech world and Wall Street. The thing that unites us is that we're very passionate about cities. We're backed by world-class investors, including Formation 8, Stanford University, and probably most notably Ashton Kutcher. And we're in a unique space that intersects finance and government and technology. So if these are interesting to you, we'd love to talk to you because we're building a really amazing team of folks. And we have big, big, big plans. You'll see that international is a step that's on our minds, but it gets us to our eventual goal of being interplanetary, which is because Mars will require significant public investment to really get off the ground. You'll need roads and streets and schools and stuff like that. So. And what else? You know, we're here to build the future of the communities want and need. And we think that it starts with getting people more directly involved with the creation of those projects and giving them a financing tool that is a tool and not a driver. Thank you.